Aquis-listed Amazing AI is a crypto treasury and AI financial services innovator. Its mission is to maximize upside and limit downside. To find out how the company intends to grow and unlock shareholder value, I'm delighted to be joined by the founder and the chief executive, who is also the largest shareholder, Paul Mathieson. So, Paul, thank you. Crypto treasury I've heard of, financial services also, but not crypto treasury and AI financial services combined. So I'm just wondering, is your company, is it two businesses or are these businesses co-enjoined, complementary?
It's really three businesses. So we have our existing long-term lending business in the US that's 100% owned. We have a new subsidiary 100% owned in Mauritius that is Amazing AI Services. And the Amazing AI Services part of the business not only does the crypto treasury, it also does the future growth in selling Amazing AI Services.
So who are the customers that you're targeting? Who would want your services?
So we have a lot of interest in UK from credit unions and groups that have been old school and don't have the resources like the big banks to actually, spend the money to develop these new AI and other systems. We have new startup companies that don't want to start from scratch, and we can provide a very quick entry to market. We also have Philippines, where we have 400 small banks that are basically down in old school paper spreadsheets, guys riding around in bikes collecting money, that are ripe for this consolidation at the right price. So we can offer them for a few thousand a month an outcome that would cost them millions to actually develop from scratch, based with our extensive experience from the US and elsewhere and our partners across Southeast Asia and the UK. In addition, we have Africa, Nigeria, that's about to become the first African country to utilize open banking and banking access data, which is why we've decided to specifically pivot towards them.
Does anybody else do what your company does?
No one does anything near what we do. So I've always had a long-term philosophy of maximizing upside while limiting risk. So, on the basis of previously in my funds management business, that's what we did. In the US lending business, we optimized returns by rejecting 95% of applicants to get decent default rates while providing a good service to customers. So we reject 95% very smartly using AI and machine learning, and then overlay that with a great product that the customer liked, being fast, fair, and friendly, and so forth. So, it is a different philosophy. We're not in it for the short term. We have a long-term approach.
What's the crypto treasury aspect of your business?
Yeah, so our US lending business has nothing to do with the crypto side in terms of we're lending US dollars for loans. So we totally separate the crypto from the US regulated business on the loan side. So we have a core US lending business that makes a lot of money out of 59.9% loans. We have our second tier that is AI services, which is leveraging off our experience. And then we have a separate crypto treasury asset business that takes our excess capital or new capital that's been recently raised and applies my extensive funds management experience to buy a portfolio of crypto assets to leverage up the returns for our investors. So all of our investors don't have all the eggs in one basket. They have a core lending background, they have a future growth AI lending side, and then they also have the massive upside of a crypto treasury strategy.
So I'm trying to visualize your current crypto assets basket. What does it look like, and what are you going to do with it, or how do you intend to build it?
So we have been very careful in navigating regulators, exchanges, and everyone else, and getting extensive, legal advice before we initiate it. And we're going to initiate it in the next couple of weeks. So we had to wait for exchanges to be comfortable with what we're doing. They've brought out a policy on Aquis on the 1st of September that they don't want companies to just be crypto treasury. They want companies that have a proportionate business that is, proportionate is open for discussion. But if you think 50-50, they don't want a company that just buys Bitcoin, raises money, buys Bitcoin. They don't want that. I mean, they're very anti that. They've made a policy, which is why I think a lot of the dinosaur Treasury 1.0 have collapsed in price. I mean, because of this new policy that I don't think is widely understood. So the difference with us is that we have a core business that can easily proportionally allocate capital between lending out at 59.9%, growth in straight services that don't require capital, combined with a very smart strategy that requires less capital than a normal Bitcoin treasury company.
So I'm just wondering whether your basket is going to fund amazing AI's growth, or is it reliant on your personal loans, for example?
No, so initially we talked about it being a provider and lending against the basic basket, but we've moved beyond that to thinking we should just limit our downside exposure over crypto, but maximize the upside. So utilizing some of the strategies that I've done in the past, where my basis of my funds management business was to maximum upside, limited downside. So I would take a portfolio of 5 Australian blue chip stocks. I would back test it over 20 years and then buy out of the money call options and put options to maximize that upside, knowing that historically it would have never lost in 20 years. Now, there's always a risk in the future, but it's not a bad starting point. That strategy averaged 500% on a basis, and I made my investors that. And on the upside, it was thousands and thousands of percent. So the question is for investors, would you like a company, for instance, us, to raise £1 million and put it into Bitcoin at £1 million, or would you rather £1 million to be deployed into a unique strategy that gives you 100 million of exposure, but the downside is limited by the premium, and then having the core basis of a lending and services business to underpin it. So they're really putting all of the eggs in one basket, and combined with that, we also buy put options so that we're not crypto fanatics. If the quantum computing hacks Bitcoin, or Iran gets bombed and all the miners go off action, we would still make money. So the only way we would actually lose on our strategy is if you think in Bitcoin is going to stay at whatever it is now, 110,000. Do you realistically think it's not going to move from that price in the next 5 years, which we think is highly unlikely. If it goes substantially up or down from that, we bank money, a lot of money, 100 times the money of a normal company. But if we were wrong, and worst case, we would still have our core lending and services business. So, and me as the major shareholder, 38.1%, I'm not in the business of losing money. And I backed this whole company with a $5 million loan as well. So I think it's a good risk reward proposition.
Okay, so you've lent the company money, but in terms of the core...
Well, I provided a facility, but right now we currently actually debt-free, no creditors, no pressure. So we're not like the others that are under pressure to raise money tomorrow because they're out of cash. I mean, I'm not a 1% CEO who's out there for a paycheck. I've, I'm independently wealthy, and I've provided a debt facility greater than our market cap. So it's, it's very different. We have lots of options, flexibility, but I wouldn't be doing this unless I saw the much, much bigger future. I mean, we want to be managing, 100 million in our exposure, which would give us 10 billion of exposure on the upside to crypto, which people ask, why don't I just do it myself? Well, I mean, I could do it for 1 billion, but not for 10.
Understood. Now, in terms of exposure, I know that your target areas are UK, Nigeria, and the Philippines, which is an interesting mix. It's quite a geographic spread. So why those areas? Because, I've been doing research on AI savvy regions, Finland, Spain, Ireland, Singapore, US. But why UK, Nigeria, and Philippines from the outset?
Yeah, so I have looked at all those regions as well, but the issue is demographics, population. So, Nigeria is going to be the third biggest population in the next 20 or 30 years. So Finland won't be. So, are you deploying? I'm deploying my efforts for my 10-year-old son for generational wealth, not for, unfortunately, Europe is sort of declining, as is Japan and other regions. So, if you've got a country that's population goes from 250 million to 1 billion, I mean, even if you're not the smartest person around, then, you have massive opportunities. They are very underdeveloped in all of these services. And I think by adding services that I've been doing for 20 years, we have a great opportunity to sell the service in. I'm not going to deploy my own capital, at least at this point, in terms of risking any money. So if customers don't pay, it's not my problem. But selling smart services, automation into these markets, we believe makes a lot of sense. And we're perfectly set up. Mauritius is the center to go into Africa. I don't know if you've been there, Sarah, have you ever been to Mauritius?
I haven't. Are you offering a flight?
Possibly.
Can't do corporate gifts, I'm afraid.
We'll see how this interview goes. But I've just come back from there. I've done my due diligence. I first went there 10 years ago to check it out. I'm not like guessing. I don't deploy capital in a place I don't know. So I'm very comfortable. It's like the Hawaii of Africa, to give people an idea. Incredibly safe. It's got the highest GDP of Africa, but it's not the place we want to lend or sell services. It's the base to hold our crypto, very crypto friendly, but also the base to sell services into Africa, Middle East, India, Philippines, because the regulatory framework has all been designed by the French and the UK over many, many years. So it's quite well respected in that sense. So it's used as the base. I mean, there's the other advantage is it's only 3% tax and no capital gains tax. So we're offering a real advantage to our UK investors owning 100% of this subsidiary, which they couldn't do. And then if we end up selling some of our crypto assets, there's zero tax. So, there's a lot of thought that goes in and long-term planning in what we do.
So you say who else is on the board? Who have you surrounded yourself by?
Yeah, so we have Neil Patrick, who's created or founded 2 consumer credit businesses before, very well experienced. We have our general manager, CFO, who's been involved since 2011 running my US operation. So we have a very, very strong core board. We also have recently hired a couple of executives with global sales experience, so including with one of the top fintech capital raisers in UK, Finturn, that has recently raised 2 billion of funding. So he has left there to join us. Starling Bank is our other executive who he was involved in setting up their digital platform, and he is now our new executive. So despite our small current size, we've been able to attract with our vision pretty quality people.
So, but this remains a founder-led business. So you've invested in every fiber of this enterprise. So could the business survive without you, should you choose to exit, sell, or just move on to other business interests?
Yeah, so I have no interest in exiting or selling. I mean, this is tiny compared to my own personal net worth. This is very small. As I said, I've provided a $5 million debt facility. The good thing about the strategies that I've implemented is that our US operation has pretty much been running by itself for the last decade without my involvement, because I've had that core team who have been experienced in the setup back in '08 and dealing with regulators. Sure, it's a very big risk that if I'm not around, but now it's sort of remote control. On the AI services side, with these new executives, very experienced, they could, they will be driving that rather than myself. And on the derivatives, on the crypto treasury side, the good aspect about most of my strategy, which I did in 25 years ago, is it's a set and forget strategy at its foundation. So the main thing is work out the best strategy, lock it in for 5 years, and go to lunch.
So how successful have your previous businesses been?
So my funds management business made investors an average of 500% over 5 years, and that is the foundation. I retired to Hawaii without bragging, but I could have done nothing, and after a week I was bored, as my nature. But it's been incredibly successful, and that is why the core shareholders have continued to back what we do. So I own 38.1%. There's probably 30 odd percent that are the genesis is from 20 years ago. The original investors have stayed there, and they still have their share certificates. They're not even interested in selling. So they're not even on the system to be able to sell. So I think it's done very well. We've had ups and downs. Debt funding has been an issue in the past, which is why we are debt free, and with myself personally providing the debt facility so that there's no risk of tricky debt covenants or some debt funder trying to pull the rug under you, or the economy goes down and they change policies. I've been through all those cycles. So, I feel quite comfortable. I used to not sleep when I had debt funders externally, but I sleep very well now.
So finally, whilst the tech and the approach is modern, you have an old school approach to your shareholders, and there's an opportunity to meet some potential shareholders at an investor lunch, October the 8th in the City of London, details of which I'll put in the text that accompanies this
Correct.
video.
I'll be in London from the 2nd to the 10th. So anyone wants to catch up, let me know.
So is this going to be your approach moving forward to meet people in person as much as possible?
That's been my approach always. So I mean, this sort of Zoom and all this isn't my gig. So all of my background has been in face-to-face presentations with 100 people, lunches, dinners, and actual humanity.
Yeah.
So. But I will combine it, because I do understand the logistics of people hearing the story and everything else. But my preferred approach is a glass of wine. So hopefully we can have one soon.
Many thanks. Paul Mathieson, Chief Executive and founder of Amazing AI. Thank you very much indeed.
Thank you.